Good morning. This is Larry Edelson with my Uncommon Wisdom weekly market video update for Thursday, March 24th. Well, we certainly are seeing continued economic and fundamental gyrations in the backdrop to all the markets, with the Middle East crisis continuing, the crisis in Libya, the bombing of Libya, the very unfortunate earthquake and tsunami and the after effects of what's happening in Japan, and considerable uncertainty still regarding Europe's sovereign debt crisis, and of course the U.S. economy, which, although some economic stats continue to look okay, some continue to improve, others continue to slide, such as real estate and housing in particular. And of course, the Fed continues to print money. All this is contributing to extreme volatility and heightened uncertainty in the markets. Let's go now to my most important market of all, gold. Gold is continuing to defy cyclical and technical gravity in the sense that it should be declining quite sharply in this time period, and yet it continues to climb. Not surprising when you look at the fundamentals, but I can assure you that the technicals and cyclicals do not support this rally. However, gold could eke out yet another new record high, as you can see right here on the charts. It could get up to 1460, 1475, but the all important area that I will be watching is for two consecutive closings above the 1453 level. I'm not very happy about gold's performance here. Don't get me wrong, I am one of the original bulls in gold, and I remain very bullish long term. However, a cyclical pullback and short-term pullback in gold back to about the 1200 level is very, very important, and I hope and pray that we see it now, because if we don't, that means gold is going to take off to the upside to 1700, even 2000 per ounce, or even 2100 per ounce in the next few months. And while that sounds good on the surface, it's not going to be good for the gold market on a longer term basis. That means if we see that kind of action now, as I've indicated previously to you, a runaway bull market up to 2000, even 1700 or 2200, 2100 on gold right now in the next few months would mean that we will probably see a 2-year correction in gold, and we would not see a resumption of the bull market in gold to $5,000 and higher until 2014 or even 2015. So again, I repeat, I prefer to see gold pull back here. If it doesn't, I will reverse my hedges, and I will recommend adding to long positions. Remember, we have core gold on from much lower levels, and I will recommend adding to those positions if I get solid proof that gold is going to make a run to the $1,700, $2,100 level in the next few months. I'm not willing to put my money on the line, or additional money on the line, in gold, or even heavily into core gold shares at this point in time until it is proven to me beyond the shadow of a doubt. Now, I can say that pretty much the same thing about silver. Silver, as you will take a look from this chart here, is performing better than gold. It is breaking out to the upside above this resistance here, but gold has not achieved a new record high yet and remains below that 1453 level that is critical. So that is what I call a fractured market. And silver, being the more speculative of the two, I'm not surprised to see it running higher in here. It might even get to $38 an ounce, and gold will fail to make another new record high. And then silver would still, in my opinion, collapse, and it could be very devastating to a lot of people. So I'm not going to go long silver here. I prefer to trade the short side of silver very lightly until we get the kind of correction that is sorely needed in the precious metals in general and in many commodities in general. Now, let's go to the dollar here. The dollar continues to look very, very ugly. However, we are seeing a bit of a rally here today on late Tuesday and continuing through. If it holds in here, that would support my case for a correction in gold and silver. If the dollar collapses in here, it would support the case for a lunge higher in gold and silver. So I'm watching the dollar like a hawk in here, and that is going to be one of our keys to the next few days and the next move in gold and silver. So please stay alert to my columns and anything I publish regarding the dollar. Now to the Dow Industrials. Dow Industrials is rolling over in here. We did get that rather sharp plunge last week, as I indicated to you, and as I was looking for. We have now come up to test resistance just above 12,000. If the Dow cannot climb above this, say the 12,100 level, and hold it on a retest, then we're going to see the Dow roll back over to the downside and move towards that 9,600 area. I suspect if that happens, we will likely see the precious metals and commodities roll over to the downside along with the Dow and the S&P 500, because that would be telling us that the U.S. economy is softening. And that is what I also believe, based on my cyclical and econometric models, that the U.S. economy is going to be sliding for the next 6 months at least. Now, bottom line, we're at very important inflection points here in the markets, and please stay very tuned to your inbox for anything that I publish, whether it's a flash alert or in my column in Uncommon Wisdom or in any of my writings and trading services. Till next week, or till my next very important signals, which could come any minute, this is Larry. Be well.